Hi, everyone, and welcome back to Finance Girl in Cyberspace. I'm Heiress, your guide to navigating the digital world of money with clarity, confidence, and strategy. Today, we're talking about two powerful concepts that work hand in hand: how to set financial goals that actually make sense for your life, and how to build multiple streams of income so you're not depending on just one source of money to carry your entire future. If you've ever felt stuck, overwhelmed, or unsure where to begin, this episode is going to give you a roadmap you can start using today. And before we get into it, make sure you like this video, subscribe, and hit that notification bell so you never miss a new episode. One of the biggest reasons people struggle with money is that they don't have clear, defined goals. They know they want more money or less stress, but they've never broken that desire into something measurable and time-based. Setting financial goals is like setting coordinates on a map. Without coordinates, you're just wandering. With coordinates, you can plan, move with intention, and track your progress. And the first step to setting strong goals is understanding the three types of financial timelines: short-term, mid-term, and long-term. Each of them serves a different purpose, and each requires a different strategy. Short-term goals are the goals you expect to accomplish within the next year. These are goals like building a starter emergency fund, paying off a small debt, saving for a trip, or getting a month ahead on your bills. The key to short-term goals is keeping them specific, realistic, and manageable. If the goal is too large, you won't stick with it. Short-term goals are all about momentum. They help you build the habit of saving, budgeting, or paying down debt in ways that feel achievable. They give you the quick wins that make you feel capable and motivated. Midterm goals usually take 1 to 5 years. These are goals like saving for a car, paying off larger chunks of debt, building a full emergency fund, or saving for a wedding or a move. These goals require more planning and more discipline because they take longer to complete, but they also give you a sense of direction beyond the next 12 months. For midterm goals, it's important to break the goal down into smaller steps so you can measure your progress. You don't just say, I want to save $10,000. You break it into monthly or bi-weekly targets that fit your income. This turns a big, intimidating number into something you can actually achieve. Long-term goals are anything 5 years and beyond. These include buying a home, investing for retirement, starting a business, or reaching full financial independence. These goals require commitment and patience. They also require realistic timelines because long-term goals don't grow from sudden bursts of effort. They grow from consistent habits over time. The biggest mistake people make with long-term goals is thinking they must be complicated or perfect. In reality, long-term goals are simply the collection of small habits repeated for years. Even investing tiny amounts consistently can change your entire financial future when given enough time to grow. Regardless of the timeline, every financial goal must be measurable. I want to save money isn't measurable. I want to save $200 a month I want to be out of debt isn't measurable. I want to pay off $5,000 in the next 18 months is. When a goal is measurable, you're able to track your progress, adjust your strategy, and hold yourself accountable. This is what turns dreams into plans. Once your goals are clear, the next step is figuring out how you're going to fund them, and this is where multiple streams of income become essential. Relying on one source of income is risky. If that income disappears, your entire financial stability disappears with it. But when you build multiple streams of income, you create a safety net. If one source fades, the others protect you. And contrary to what people think, you don't need to build passive income right away. Most people start with simple, approachable side income streams before they ever reach the passive stage. Side hustles are usually the easiest way to get started because they depend on skills you already have. You might offer freelance services, do rideshare driving, pet sitting, tutoring, yard work, digital design, cleaning services, or online resale. Side hustles are flexible and allow you to earn money on your own schedule. They're perfect for funding short-term and mid-term goals because the income shows up quickly and consistently. Gig work is another option, and it's more structured than a side hustle, but still flexible. This includes platforms like DoorDash, Instacart, TaskRabbit, Upwork, Fiverr, or any service-based marketplace. Gig work is ideal when you need money fast or want to increase your income without committing to a traditional part-time job. It gives you the ability to control your hours and your workload and choose how aggressive you want to be with your financial progress. Digital skills introduce an entirely new category of income streams. Learning skills like graphic design, copywriting, video editing, social media management, or coding opens the door to higher paying opportunities with long-term potential. Even basic digital skills like managing social media accounts or editing short-form video content are in high demand. These skills often lead to freelance clients or remote work, both of which can become stable streams of income. If you want to build long-term financial security, investing time into digital skills is one of the most powerful moves you can make. And then we have the early stages of passive income. True passive income takes time and building. It doesn't happen overnight, but you can start laying the foundation long before your income becomes truly passive. This may include creating a digital product, starting a YouTube channel, building a small Etsy shop, putting money into index funds, or renting out a spare room. None of these are set it and forget it at the beginning. But if you put in the work consistently, they can become income streams that grow with less and less effort over time. The magic happens when you combine clear financial goals with multiple streams of income. You're not just hoping you reach your goals, you're giving yourself the financial firepower to reach them faster. Your primary income pays your bills. Your side hustle may fund your emergency savings. Gig work might help you pay off debt. Digital skills might increase your overall earning potential. And passive income, once it develops, becomes the long-term engine that pushes you toward financial independence. Financial success rarely comes from one big breakthrough. It comes from stacking small, intentional decisions over long periods of time, setting clear goals, sticking to realistic timelines, tracking your progress, and building income streams that support your goals instead of relying on a single paycheck. When you combine these habits, you create stability, flexibility, and freedom. If you found this helpful and you're ready to start building a financial plan that actually works, make sure to like this video, subscribe, and hit that notification bell so you never miss a new upload from Finance Girl in Cyberspace. I'm Heiress, and I'll see you in the next episode where we keep exploring the digital universe of money, one smart decision at a time. A strong credit score is more than a number. It's a financial tool that affects nearly every aspect of your money life. A high score gives you lower interest rates, cheaper car payments, better insurance premiums, easier rental approvals, and far greater financial flexibility. Your credit score is part of your long-term financial identity. Treat it like an asset, protect it like a passport. If you found today's breakdown helpful, make sure to like this video, subscribe, and hit the notification bell so you never miss a new upload from Finance Girl in Cyberspace. I'm Heiress, and I'll see you in the next video where we keep exploring the digital universe of money, one smart decision at a time.